right, we're back. Another episode, Jack of all trades. We got a fantastic episode in store for you guys today. We're gonna get into some more Bitcoin options 101. If you haven't seen our previous episode, go ahead and check that out. We also want to encourage you to go over to the podcast. Just look for the logo. We do a little behind the scenes preview of the show we're gonna do today, which is gonna build off of the put option, Jack. We're using Bitcoin as our underlying contract, and today we're going to show some people how to avoid some of that fear of missing out, the FMO, like you talk about all the time. But this example, we're going to go into calls using a long call
right
option.
Yeah, I mean, we're going to use you get the same thing done when you use a long option. You put optionality in there, and then you're able to participate on whatever side that option is. So I kind of want to outline basically like here's another simple way to do it. Before we use a put, this would be a call, and if you can understand that this is very simple, and this is like we talked about a little bit on the podcast, like it's for people who want to either take profit or put a floor in on profit they already have, or maybe a floor in just the risk of the trade. But this is more geared at hedging profits at this point is what we're looking at. We're using Bitcoin. Bitcoin is very volatile. I think this is a good place to use it, but you can do this with any trade you have, any investment you have. You could be in the stock market, and in these times where people are worried, they may have a ton of profit in the stock market, and they think to themselves, "Oh, I can't deal with it if I lose all this money." So then these are ways to hedge based on your and then you can kind of tweak it based on your level of where you think the market's going, but your fear has got you thinking about changing it, even though you still think it's going to go up, or you still want to participate on the upside. I don't know. It's a roundabout way of saying it, but the bottom line is we're trying to pull that fear out of your decision making. Your decision. If you really feel like you should take profits, then take the profits. And if there's fear that you're going to miss out the upside, today we're going to talk about how you can still keep a little upside participation and still take your money off the table.
Right. A little way to ease the mind. The trading game is mostly mental. You can get yourself into some rocky spots if things aren't going your way. We always talk, you want to jump into a Bitcoin type investment as with using disposable income, eliminate some of the fear that, hey, if it goes to zero, I'm out, bad decision. But this is a way that you got in, and the market actually turned in your favor. You have some profit there. Like you say, you don't want to sell it all and just get out. You want to take a little bit off the table, maintain that long position in case you hit the big one. And that goes for, any underlying, really. So let's jump on over. You have a spreadsheet set up, kind of like we had for the put. Like I said, go back and watch the episode we did. It's titled Bitcoin Options 101, but it's we're using the put example in that one. This one, we're going to move forward with the spreadsheet and show you a call option. So we have your screen up, Jack. We're looking at the numbers.
Okay, so you've got all this. Now, the biggest thing here is what I'm trying to show is, like, before we did a 10,000 put, and we bought that at $1,000 when the stock, or excuse me, the Bitcoin price went to 15,000. And these are just hypothetical numbers. But so let's say we looked at, like, so if it goes down, our option value goes up, and then we get to recoup this profit. Now let's go to let's get rid of that. Okay, so now we're going to go to this call option. right? So, are you with me here? So,
yeah. Okay.
Now what this is implying is the same situation where I bought, I got in this investment that I liked for a certain reason. It's Bitcoin. I paid $5,000 for Bitcoin, and you could do this off at any price level. And the bottom line is, here you have, again, you've got your market here to $5,000, right? So, or $15,000, excuse me. And so you have this $10,000 profit, and what happens for anybody, any trader, even though you still believe in Bitcoin, you've watched the history of either markets or especially the Bitcoin market, and what goes up must come down, and even if it's trending higher, you get these hype cycles where the market runs way high and then it pulls back, and people, they see that happen, and like, oh man, if I would have sold it when it was up, I'd have more money now. Or if I would have sold it when it was up, I'd have more money and I could buy back in at a cheaper price and pocket the profits. But if you got into it for a reason and you're a believer in Bitcoin, you're a believer in whatever your investment is, that's what keeps you from taking that profit, because you're like, you're not thinking, oh, it's 15,000, it's not going to go any higher. You're thinking it's going to go to 20, that's all time high. If it gets through that, where's it going? 30, 40, 50, 100, a million, whatever. And that's, for me, for Bitcoin, is like a long term, way higher if it works. So I don't want to get out, but I completely understand when you have significant profit, and most people would agree. If I invest 5,000 and I've got 15,000, a 200% profit is a giant profit. So what we look at here is, if I could buy, instead of, a lot of people think of, oh, you buy a put, that's insurance to the downside if you're far enough along in your options understanding to understand what a put is. But a call is the right to buy. And so if I have the fear of missing out, I can participate to the upside by buying a $20,000 call for $1,000, let's say. And these are hypothetical prices, and depending on how much time you might want to cover for a year, for $1,000, it would be a pretty significant time frame. So anyway, so if I buy this call at 1,000 and I sell my Bitcoin at 15,000, well, now I've got $15,000 in my pocket, and I spent $1,000, so I have 14,000 in my pocket, and that's 9,000 more than I started with. Okay, because I started with 5, now I have 14, and I don't have any risk to the downside. I have sold all my Bitcoin, and so I have no exposure to the downside. If it goes to zero, I still have the cash. But as you can see, with a call at expiration, what happens is I have, it goes to 16,000, nothing. So all the way up to 20,000, I'm kind of missing out on that little window here. But I still have the $9,000 profit from my original, so it's not the end of the world. But then as it goes higher, I'm now walled off to where I make money. I ran it all the way out to 100,000, where my option's worth 80,000, and then, if I, here you'd look at like the initial future, minus the Bitcoin. So it's basically just, my 9,000 in my pocket. Can you see me doing this here?
Yeah.
Okay. So here's the money I have to the side, and then I could just, I could have my net investment be here. And so there, if it goes to 100,000, so this is my total investment anywhere, right? So let's just thin this out a little bit. All right, so here's my total investment as it goes on, and in this is net profit. So I'm locked in. It goes to zero, goes to 1,000, whatever. I'm up $9,000. My 5,000 investment is now 14,000. My profit's 9,000. If it goes to 100,000, I make 89,000. And I mean, just to make a point, right? Like,
Need a bigger column.
yeah, I got that. So I can just, what's going on here? Oh, sorry.
All good.
Behind the scenes here, we got, you do need a bigger column. You need a bigger boat. You need a bigger boat. So
bigger the better.
right. So here, again, bigger. So it's unlimited. So I go all the way up to $1 million. I make $1 million. I'm participating on any upside move, yet any downside move, I've locked in to 9,000. And, you know, at the time that we did it, I only had 10,000. So I'm not missing out on a lot. Now, you could argue like, oh, the worst case scenario would be, you know, in my original would be like, oh, if it goes to 20,000 and sits there. And that's true. You know, it goes to your option price. Your option's worthless. It needs to go through it. And then, yes, I missed out on the extra $5,000. Okay, from 15 to 20, but that's a small price, right? So you're like, oh, okay, I could have made, you know, instead of making 180%, I could have made, you know, 300%, or, you know, it's like, fine, you know, like.
Sure, but that's like you said, when you get into the process, right, where you were comfortable with taking a profit, but you want to stay in. So the decision's already been made. You're gonna, you might top out at 9,000. Like you say, you could miss out on that 5,000 little bump there, but then you shouldn't have sold. You know?
Exactly. So that's the point. Is like, this is for a person. Like if I can sit there and just say, hey, I'm in for 5,000. It's sitting at 15,000. If it goes to zero, I'm still fine. It doesn't change my life. And so a lot of times, you know, it's for this any option strategy, but this strategy is for the person who's in a bad mood. You know, they're in a bad mental space. They're like, oh, you know, should I sell? Can I? Because that's why I talk about this is for hodlers. So big Bitcoin culture, you know, you're big into like just holding forever. Like that's kind of just the culture. Like we're not getting out. We believe, you know, it's cult like behavior, but it's true. And then people often talk about like, oh, how this guy's, you know, strong hodler, and you know, it's like, well, you can buy strength in your conviction if you can remove the fear. And if the fear, if I'm not afraid to lose the 15,000, I don't need to buy these calls. Okay, it's not magic. It's like having car insurance, right? If I'm a multi-millionaire and I'm driving a $35,000 car, I'm not sweating it if my car gets, you know, collision and I have to buy a new one. It's like I can afford it. So I don't go to an insurance company and buy collision insurance. I just buy, you know, I'll buy the federally mandated liability insurance just to follow the law, and so I don't get a ticket. But it's like I can handle the 35,000 if I'm independently wealthy. So there's no fear there. There's no fear in like. But let's say I'm a guy and I'm paying, you know, my car's financed, and probably shouldn't have this, but if I don't make quite as much money, but let's say my job, you know, I'm in sales or I'm some sort of job where I need to kind of show a better, you know, have a nicer car, you know, but I really can't afford to replace this car. Like if this car, if I get in a wreck, well then I buy the collision insurance, and then I'm able to just go out and drive the car without thinking, oh my gosh, if I crash this car, you know, I could lose my livelihood. Same type of deal here. It's free market insurance. Instead of like having to choose on the fear of losing that 15,000 and the $9,000 profit, or the fear of like taking my 9,000 and then, oh my gosh, Bitcoin changes the world and it goes to $1 million, and here I'm sitting with my You look at his net profit, 9,000 is a lot different than $1 million, right? So it's a pretty sad day if you're sitting on the sidelines. You were right, and you didn't participate on the upside. So this $1,000 buys you peace of mind in both directions, and then a lot of good things can happen from that. It's like if Bitcoin pulls back and I'm sitting here on $9,000 profit and it goes way down, well then, but I still believe in Bitcoin fundamentally, well then I can accumulate more Bitcoin and rinse and repeat and just accumulate by taking advantage of volatility. And this is, something I'll throw in a plug for Nassim Taleb and his books of anti-fragility, and he speaks a lot to optionality and the value in optionality, and that's just taking the volatility here and putting it in your favor, because you have a two-way go. It's like if the price goes down, you're locked in, but if the price goes up, you make a lot of extra money.
Right. If you could capture those, buy low, sell high, and get into a rhythm there, and say, Bitcoin sits around 15,000, maybe 15,000, 5,000, 15,000, 5,000, 15,000, 5,000. You can theoretically start building a large base, right? You could keep rolling it, however much you want to, 100% or 50%, whatever you want to do. This gives you a nice way to take some of that fear off, right? Take that fear out of the game.
Yeah. I think once you get the fear out of the equation, you can make better decisions. And I think, this is 101 video, and we're just trying to show you how it works, just extremely simply, is that, here's your option. Why am I doing that? Okay. So your strike price at 20,000. And if you look here, it builds, it builds a wall there, to where below there, you're locked into that 9,000. Above there, you participate on the upside. It was similar to what we did in the previous video, but it's just a simple way to, before I would look at if it goes down, I lose money. That makes me want to sell and take my profit. Whereas here now, that fear is gone. So we're basically, it's insurance. It mitigates fear. And like you said earlier, that's like investing and trading in particular. That's the game, the psychology and the fear management, whether it be upside fear, downside fear. That's, that's a big part of the game. You could have a fairly decent strategy, but if you let fear run your decision making, you're going to get chased out of the markets, probably at the wrong time.
Absolutely. So that's our example of using a call option to avoid getting run over in your own mind just based on fear. So go ahead and take a look at the Bitcoin options 101, where we use the put example, review the call example. We're going to come up with some more material where we combine calls and puts. So some different options. We'll have some more down the road. If you have any questions about this episode, feel free to reach out to us on Twitter. You can hit Jack Newman at Jack Viking on Twitter. You can reach me at First Gator on Twitter. Go ahead and feel free to like, comment, subscribe below. If you don't have Twitter, we can comment back and forth there. And thank you for tuning into this episode, and be sure to tune in next time on Jack of All Trades.